All right. Good morning, everyone. Happy hump day here as the market continues to push higher. Um, if you've been in my room, you know that the path of least resistance and the primary path has been higher toward new all-time highs, and that's what we are seeing. Today, we will be live streaming and featuring our IWJ Pivot Point Pro indicator. You can see on my screen here the buys and sells. If I hit the eyeball, they go away and they come back. So if you're not familiar with this indicator, we created our own custom trading view indicator and can only be used in trading view because they do protect the code that goes into making it, and unfortunately other platforms don't, so you can only get it on trading view. And it is super simple to use. When it says buy, you buy. You can see here in the pre-market had a nice buy, and sell, you sell. We don't trade pre and post market, so the blue is post market trading, the yellow is pre market trading. We only trade the white, which is regular trading hours, which will come online here in about a half hour. But we do need the pre market and post market information here for the indicator to understand where it's at when the market does open. So, um, what it is, let me summarize it really quickly. It's a price action um, forward looking indicator. So what does that mean? Well, it means that most indicators look at things like, for instance, moving averages. So you got VWAP and the 21 here on my screen. Black is VWAP, blue is the 21 exponential moving average. A lot of indicators will look at things like that and say, oh, they crossed. Now it's time to get bullish or bearish, whichever one, it is. Well, that cross generally happens too late and you miss the move. So what our indicator does is it looks at key levels, high volume levels, studies price action, and it looks at about 175 different inputs. And those inputs allow it to make good entries for buys and sells. Those inputs are weighted differently, so it does look at things like moving average crosses, things like that, but those are weighted less. So, for instance, you have a pre-market low right here at 609.59. You can see they touched it here in the pre-market. If we go back and look, the actual low for the SPY overnight is about 606.19. In any case, these levels are key levels because they are the Globex levels. They are the overnight traded around the world levels that got bought and or sold, in this case bought because it's the pre-market low. So if price comes down into that level and we start to get a reversal, assuming things work out and the 175 things it looks at, it has enough favorable information, it will issue a buy signal. And this pre-market low will be weighted heavier than, say, a moving average cross because it is a real-time key level that we're looking for a bounce off of. For this, the same thing goes for the pre-market high. You'd look for a rejection off of that and a sell signal there, assuming things line up. Now, they don't always line up. Sometimes they push straight through and you don't get any kind of buy or sell because that's just the way the market's going. For instance, yesterday we had a trend day, so the pre-market high was right here. There was no sell signal until you got way up here. But we had already established a trend day, so none of these sell signals matter. You don't take them on trend days. You just ignore them and move on with your day. So it doesn't mean that just because we hit the pre-market high or low, we're going to get a buy or sell. It simply means that those are key areas that the indicator is going to look at for potential buys and sells. So forward-looking price action-based indicator, absolutely killing. Yesterday was a trend day, so we didn't trade much on that day. As far as how it goes, you start off with taking all of the indications, but once a trend is established, you no longer trade against the trend, and you kind of just sit on your hands for the rest of the day. So you do have, if you get the indicator, you do have instructional videos, and you have a link to TradingView. So if you don't have a TradingView account, don't sign up until you get the indicator. You can get a TradingView account here at a discount. Full disclosure, I do get a kickback from TradingView for referring you to TradingView. However, you also get a discount, so it's a win-win for us. Tells you how to set up TradingView, how to set up the indicator, day trading strategy, our trend day strategy. So yesterday was a trend day. We used our trend day strategy yesterday, and then our weekly swing strategy. So all of this training here shows you how to use the indicator. Super simple buy and sell alerts. Now, one thing to be clear about is I always peddle basically what I would call truth. And that is to say, I'm not here to tell you this is a get-rich-quick scheme. This is not going to be perfect. It's going to have losing trades because that is how trading goes. If you don't understand that there are losing days in trading, losing weeks, losing months, if you don't understand that, you're going to be a very poor trader because you're going to continue to try different things till they have a losing day, and then you're going to move on to the next thing, and you'll just keep bouncing back and forth and never really learning how to trade or the overall psychology of trading. I do have a podcast called The Subconscious Trader where I do talk about this. And trading essentially is finding a small edge, because that's all you're ever going to find in trading is a small edge. You're not going to find something that works 90% of the time. If you do, you'll be very, very rich. You're going to find things that work 65% of the time. 70% is a really, really good edge, which means that 30 to 35% of the time you're going to be losing. But if you have your risk reward set up properly, which we do, and you follow the rules, which we do, and you have that edge, which we do, you will beat the market consistently, and that's what it's all about. So if you want to learn how to truly trade, that's what we're here for. That's what I'm here for. We talk about it all the time. We go through trading psychology and how all of that works. As far as counts go, yesterday, well, not just yesterday, since we established this B wave high and then this 1-2 setup here, not this B wave high, this could be a B wave high, but it's unlikely. Since we established this 1-2 setup and then another 1-2, since we established this low right here, I've basically said as long as we're above this low, we are going to take the direct path to all-time highs. They have held this low. We are on our way to all-time highs. 61.59 was the 1.0 here. So now that they've gotten to that, 6,065 needs to hold for the most bullish path forward. We would expect them to hit 62.18 here first. In general, you would expect this kind of path up toward 6,400 as our overall target, 6407.75. This was 63.50, contract roll pushed it up. So 6,400 is our target. Excuse me. 6,400 is our overall target, assuming they can continue to hold support. If support breaks, this can unravel to the downside very quickly. But overall, given the ugly structure, I would expect all-time highs either way. So should they break down from here, we would look for a three-wave breakdown and then all-time highs, or the current path, which is directly to all-time highs. Now, should they hold anywhere, anywhere, should they break down from anywhere and it's a five-wave move, so if we get 1, 2, 3, 4, 5, and then a bounce, then we'd be looking for a much bigger breakdown. But as of right now, that is not what I'm looking for. That is a put it on the back burner and see what happens kind of thing. Right now, I'm looking for the bulls to make new all-time highs. Dan says my mic is very muzzled sounding. Is that true for everybody? I do have a cold, so that could be part of it. On the NASDAQ is the same story. We have our 1-2 setup. We're looking for them to essentially hit this 22,670 area, pull back, and then launch into 23.1, and overall 23.5 would be our target on the NASDAQ. Mike seems good, but I do hear your rooster. That thing never stops crowing. It's funny that you guys can hear that. Sina, thank you. Says wishing me good health. I appreciate it. NASDAQ, same story. We are looking for continuation all-time highs. 23.526 is the target. Continuing to follow our path that we have laid out. Now, admittedly, I did not love this structure because it is a pretty ugly structure. Off of this low especially, you have a lot of overlap, and then they come down. So I'm still cautiously optimistic for this path to play out, but I do have caution because it's not a very clean 5-wave structure through here. And when those do fail, they can reject very hard. The Qs should be at new all-time highs, honestly. Yeah, so in the pre-market anyway, they're at new all-time highs. Assuming they open up there, we would look for them to be at all-time highs. So the Qs at all-time highs. The SPY is still a few points below their all-time high, about 5 points below. RTY basically flat today. The market basically flat opening. NASDAQ's doing okay, but a little bit of a flat start to the day. Banks are flat in the pre-market. Semiconductors pushing again. That's a very bullish sign. So overall, we're seeing bullish behavior today. So the expectation would be continuation until, of course, we see any kind of pullback. Gold red at the open, silver red at the open, Bitcoin's pushing. We do go over all these charts on my daily call. So if you're not part of my group, my daily call, we do go over all of these charts in depth, give you the forecast on them, all those kind of things. So very beneficial to join the groups if you want to know what's going on with the Mag 7, what's going on with gold and silver, what's going on with any of those things, Bitcoin. What do you see for a possible long swing? 6,100 without a big pullback. At this point, you're probably going to want to wait for 6,100, or if they pull back from here, you could look at 60.65. If they hit 62.18, then you could look for them to pull back to around 6,100 and go from there. But in general, you're looking at them to break out here to 6,200 plus in general. Doesn't have to happen that way, but that's generally how it happens. We do have 30% off of the first month of the indicator. If you sign up for the monthly indicator, you get 30% off your first month. We also have a 30-day money-back guarantee. So if you're new here and you're just joining the stream, I appreciate it. Thank you. If you come down to our TradingView indicators, it's normally $59 a month. Right now you're getting 30% off of that for the first month, and you get a 30-day money-back guarantee that is only good. Sorry, let me clarify. You always have the 30-day money-back guarantee. The coupon for 30% off is only good during the live stream. So we're going to live stream trades today until we don't have anything to trade, or we get, some trades through until we're done, basically, until we're done. And once we're done, that 30% off coupon goes away. To use that coupon, you click here to get the indicator. You click on the monthly. I can't do that because my system thinks I already have the monthly, because I do. You scroll down to where it says right here, pay with credit card, PayPal. You click have a coupon, which is right above that. Enter monthly 30. So you type it in, all one word. Now I'm going to hit enter. It's going to come up red because I'm on the yearly indicator, so it's not going to let me put that in. But you hit enter here, and it'll process and it'll say it's a good coupon. This one's invalid because, again, on the wrong thing. Then you click whether you want to pay with a credit card or PayPal, and then hit sign up, and you will enter your credit card information on the next screen. So don't get confused and think you're supposed to put your credit card in here. You're not. You just say how you're going to pay, hit sign up, and on the next screen it'll either take you to PayPal or take you to a credit card screen where you can enter it there. So again, 30% off only during the stream. After that, that coupon goes away. Morning, Sam. Any questions on anything before we get started? We got about 12 minutes before the open. People always ask me, if you have the indicator, how do you know what you're looking for at the open or in general? It's just always the opposite of whatever this is. So this is a sell. So at the open, we'd be looking for a buy because there's only two things that can print. I think I have my stops turned off. Let me double check. No, I have them on. Okay. There's only two things that can print when you have a sell. Either a buy signal, so you get a sell here, and you get a buy here, or a sell stop, SS, or short stop, whatever you want to call it. So you can see a stop was here. You can see a stop here and here. So the only things that can print when you get a sell signal on the chart is either a buy down here or a sell stop here. So if you have a sell on the chart, you're looking for a buy. And if you have a sell stop, you would be looking for another sell most likely. So anytime you have a sell on the screen, you're looking for a buy. And anytime you have a buy on the screen, you're looking for a sell. What dictates whether you get a buy or sell or a stop is the cycle. So the indicator does use a value of time, and that is weighted in its decision making. So if not enough time in the cycle has passed, it will not consider the sell cycle done. It will just consider you still in a buy cycle. So what happens is, just so you guys are aware, when a buy signal appears, you are still in a sell cycle. However, the indicator has identified weakness and says the sell cycle is about to end, and we would be looking for a buying cycle. Again, there's a lot of factors that go into all of that. It's not just, oh, well, here it is. No, it's time. We had enough selling time. Now it's time to buy. Things have to be lining up. For instance, this buy right here came off of yesterday's close. So we came down, tested yesterday's close, bounced off of that, which is a good key level, got the momentum and things that it wanted to see, and issued a buy signal that worked out. Now, again, we don't trade the pre-market. I'm just giving you an example. But when you sell, you are, so back to the story, sorry. When you get a buy, you are still in a sell cycle. Now, if the buy continues and it goes in the right direction, then it will continue through the buy cycle, and then you'll get a sell signal. This sell now is in a buying cycle. So you are still in a buying cycle, but the indicator has found a weakness in that buying cycle, so it issues a sell and is looking for the market to come down. Once it comes down or goes long enough, you would look for a buy cycle, and so on, because the market just moves in cycles. The reason for the timing factor is it eliminates a ton of chop. In other words, If this comes down and fails, you don't get a buy and then a sell and then a buy and then a sell and then a buy and a sell. It has to complete the cycle. So it eliminates a ton of chop doing that, and gives you far more accurate reads. One thing I don't know if I mentioned about the indicator, you do need real-time data. So if you look at the settings, there are inputs. We're tracking 3 screens at once, all on one screen. You don't have to look at all the screens. You don't have to look at all the moving averages. So part of the 175 things it's tracking are other indexes. So when we're day trading the SPY, we want to see the futures market for the S&P 500 doing well, and we want to see the futures market for the NASDAQ doing well. If everything is in a broad buy or sell, we get a buy or sell signal. If, which happens a fair amount of the time, the ES and SPY are moving up and the NASDAQ is moving down, or vice versa, you're not going to get a buy or sell signal because there's not broad buying or selling across the market. Everything has to be in sync for it to issue a signal, because that's when you're starting to see broad buying and selling across the indexes. When you see divergence, in other words, the ES is doing this and the NASDAQ is doing this, very often that's going to lead to chop, where they're trying to get back into sync. So they're going like this, and you're not getting good trades. So the indicator will ignore all of that because all 3 markets are not in sync. The indicator can be used on any index, any stock. If I was going to use it on Apple, I would simply go to the Apple chart. So I'd change my chart to Apple, and then I'd click on these 2 boxes and change them to Apple as well. So we just go to AAPL, click on it, and it populates that box. We would do that for this box as well. I'm not going to do it now, but that's what you would do. And then you can change this ticker to 1, and you can use it on Apple. Use it down, change that to 1. That goes for any stock, any index. If you want to be on any of them, you can do that. Now, if you're going to be on NASDAQ, you're going to want these to say ES and SPY. If you're going to be on the ES futures, you're going to want this to say SPY and NASDAQ. Those 3 should always be in these boxes if you're trading them, because you want that confluence across the indexes to make sure you're getting good buy or sell signals. So I hope that makes sense, that anytime you're trading either ES, NQ, or the SPY, you want these to, all 3 of these indexes being tracked. If I wanted to trade QQQ instead of SPY, would I leave those settings or change them to QQQ? No, Qs are going to be the same. You would leave it on ES and NQ, and then trade the Qs. The Qs will have almost the exact same buys and sells as the SPY, because they are moving generally the same. Alright guys, we are at the last bar before the open, so I'm going to get ready to trade. Right now, because I can see the back end, it does look like we would most likely get a sell stop and not a buy signal right now. However, if the open pushes down a little bit, we can get a buy signal. But right now, it's not going to be a buy signal. If they go higher at the open, you're just going to get a sell stop. Key levels for today, they're above 607, which is our call wall for the 0 DTEs. If you don't know what that means that's the highest level of calls options for today. And market makers don't like to be above these levels, because that means they got to pay all of these calls. And if you think of the market makers, they're like the bookie. They want just the spread between the calls and the bids and asks. So if they have too many calls, which is what happens when you get above these call walls, they have to hedge their position, which is why you get squeezes. So as soon as they got above it, they held, they got above it, and they squeezed. That's why you get squeezes and sell-offs, because the market makers have to hedge at this point. So they have too many, they're selling you the calls that you're buying. And if they're selling all of those calls and prices going up, they're losing money. So what they have to do is they have to hedge their position and buy calls. When they buy calls, that drives price higher. That creates momentum. Other people buy calls, then the market makers have to buy calls on top of that. That's how you get squeezes. So our call wall is at 607. You would expect them to try to close below that today. But if you get in positive gamma, which we're in now, if they can't push down, that's when squeezes happen, and we go up to the next levels on the fibs, which would be again that 62.18 level next. So um, right now we are in positive gamma. Market makers have to hedge until they can push price back below this call wall, and then they can push down a little bit from there. The overall call resistance for the options expiration is up here at 610. And our put wall is also sitting at another high call level. So puts and calls are stacked heavy at 605. So I would expect that to be very strong support. Again, they don't want to be below the put support because that's where the highest level of puts are. And then they have to hedge to the downside. So those are going to be very, very key levels to understand. Those are places you look for trades. If they come down from above, so into the call wall is resistance, down from above is support. You'd look for them to hold and try to push, and that would be a key level to look for a trade to appear. All right, we're about ready to get going here. A couple minute and a half away from the open. I would anticipate most likely getting a sell stop and then another sell signal at the open. However, they could just hold this sell and push down into this call resistance zone as well. So kind of in no man's land here. If you look above 610 is the next level. So they have plenty of room to the upside without a ton of resistance other than the pre-market high. They're above the 21 and VWAP, which is bullish. We talk about trend days in my room. Trend days when they take out the pre-market high or low, depending on which way we're trending. They take out the pre-market high in the case of going up. Back test VWAP in the 21, hold, take out this high right here. That would create a trend day to the upside. So whatever high they make here, they come back and test VWAP in 21, take out that high, you're in a trend day, and you're very likely to go higher the rest of the day. Morning fitness all day. All right, here we go. So the reason I have VWAP in the 21 is they're just good support resistance levels. And if they push away from either, you can expect them to come back and test. And so if we're way up here and you get a sell signal, this is a good place to take profit off of VWAP in the 21 because they're very likely to do that. Just so you know the model, there's our sell stop. So this is what I anticipated, higher sell stop and then get a new sell signal. I won't be super excited about it. They've already pushed through the pre-market high. They've gapped up. So we'll see how this goes. We want them to break down early if they're going to break down, because otherwise they're going to hold the VWAP 21, create a trend, and it's not going to be a very good trading day just because we don't trade trend days. So a lot of people get confused and think that the indicator doesn't work when we have a trend day like yesterday, for instance. So real quick, we'll go look at that while we wait for this candle to clear up. So I think the indicator doesn't work because you get a sell signal, sell signal, sell signal, the market presses higher. Well, the whole point of the indicator is to find highs and lows and give you entries based on that. And what it's doing is it's just playing probabilities. So if you think of flipping a coin, that's a 50-50 proposition. Over time, you're going to win 50% of the time and lose 50% of the time. It's the law of big numbers. Well, the indicator's looking for edges like 60, 70%, like I talked about earlier. And so what it's saying is when I come into a key level, for instance here, you can see the key level, and I get weakness, more often than not, we're going to reject that key level and give a pullback. But on trend days, we do not reject those levels. They pull back. I mean, it rejected a little bit, and then it broke right through. Same thing up here. You can see the red line is a key level. They got to it. They sold. This was actually probably a winner. Back to the 21, held the 21 and continued on higher. It's going to continue to issue reversal signals when it gets the right parameters at key levels, regardless of the trend, because that's what it's designed to do. So on trend days, it's not broken. It's doing what it's supposed to do. It's playing the edge. You are just you just have to identify that it's a trend day so you don't get caught up in trading those sells and losing money. More often than not, way more often, about 7 out of 10 times, you're going to come into the pre-market high or low like they did here and reject it. So they came right into the pre-market high, spiked through it, and so far have rejected it. That's what's going to happen 7 out of 10 times. The other times, you're going to establish trends, and you're going to have a trend day. But more often than not, what we see is the market go up, make a high for the day, come down, make a low for the day, come back up, and then trade in whatever range it's decided it's going to trade in. We capture those moves. Morning, Hans. You know, I had somebody just get the indicator the other day. They emailed me the very next day and said, I lost money, it doesn't work. I mean, one, you didn't follow the rules because we made money the day that they lost money. And two, you used it for one day. There's going to be a learning curve. There's going to be some time, and there's going to be losing days. It's not a one-day money-back guarantee. It's a 30-day money-back guarantee because I want you to use it and see it and use it for an entire month before you make a decision on whether it works or not, because you know, last year 75% of the time of the months we were positive, 9 winners, 3 losers, and we made 35% on a 100K account for the year. If you're making 35% on your money, you are crushing. That's an incredible year, and that's what the indicator does. This year we're already up 29% on a 100K account, and that'll go up in June. We've had a pretty decent June. And that's including May, which was a losing month for us. May was not a good month, and we're still up $29,000 on almost $30,000 on a 100K account, and we're only 5 months through the year. Well, we're going to be 6, but I don't have June's numbers yet. So it's a powerful indicator, guys, and yes, in the day-to-day it can have losing days and get caught up in those things, but for the most part, you're going to find out that your winning days outweigh your losing days by a bunch, and that your bankroll will grow if you simply follow the rules. People want to tweak things and change things and do it their own way instead of saying, here's a proven professional trader who's given me a proven professional system. I should just follow it because 35% is great. They say, why am I not making 100%? And then they tweak things, and that's when they start to lose money. Have the indicator. Do I need to check on updates in TradingView? Yeah, you'll see a little. So they were on here earlier. They're not now, but like for these mentor cues, they update daily because they give you the levels daily. You'll see a little blue circle when I do updates. It'll be right here, basically where the eyeball is, but it'll just be sitting there when you're not hovered over it. And then you click that and you can update it. So right now we're still on this sell right here. Now the sell stop comes up. You can see it right there on the screen. If that sell stop stays and we close the bar, then we will be in a continuation of this buy signal down here. So what you have is you're in a buy cycle. You got a sell signal that says there's weakening in the buy cycle, but it's pre-market, so that can just be light trading. And then you got a sell stop, which says we're still in the buying cycle. But now that we have a sell stop, we can get a new sell signal issued when there is weakness, assuming the sell stop holds. It needs to hold for another 3 minutes. But if we see that, we should get a sell. Now the issue with getting a sell here is they did spike above the pre-market high, and they have back-tested VWAP. You can see they came right down to it, almost to the penny, and bounced off of it. And now they're pushing higher. And if they take out this high, that does put us in a potential trend day setup. And what we would do in that case is take one sell, potentially two, but there's really no key levels. So 610 would be the next key level that I would want to trade off of. So if they break out above this and then give us a sell signal, we'll take the first one because you see failed breakouts all the time. You see them all the time. So we'll take the first one. If they come back and hold VWAP again and do this, then that's kind of game over for the day. It would be a trend day at that point, and that's what we'd kind of be expecting anyway, given that we're in a wave 3 of 3. So keep those things in mind. It may not be a great day for getting a lot of trades, and the trade we do get may be a loser because it's likely to be a sell into a trend day. So we'll see how it goes. I say that, and I've seen a lot of moves up. You get a sell signal, and it does this all the way down to the pre-market low, and you absolutely crush for the day. But statistically, this is not going to be a great day for reversals. Yeah, well, I mean, assuming they do come up here and take out this high. Does anybody have any questions about any of this and what we're going through and what we're looking at? Okay, so it looks like we're going to get the sell stop to hold here. So we will be looking for a put. We would be looking for a sell here, guys. But again, we're going to be a little bit cautious with our trading today now until we see some kind of bearish pattern or bearish move play out, just because they are starting to establish a trend. And should they hold again over VWAP in the 21 and then take out another high, that would be very indicative of a overall trending day. We are, excuse me, we are going to be, as of right now, taking a 608 strike if we do get a sell signal here. obviously for today's expiration, and then we'll have to see what price in stop is or are. But currently we're at the 608 strike price for our entry should we get a sell signal here. And just an FYI, we do take the sell as soon as it appears on the chart. It can appear and disappear just based on what the bar does. But we take it as soon as it appears on the chart because that gives us the best chance at the best entry. A lot of times you get bars that move very quickly. And if you get in as soon as you see the sell signal and don't wait until the close of the bar, you very often get a better entry than you would if you wait for the close of the bar. The internals are a bit weak, so a sell could be profitable if they remain weak. Yeah, I actually haven't looked at them yet. Let's see what we got here. Yeah, the bull, yep. This does look like a potential for a breakdown. So what you want to see, this is a great point, Maxime. Good job finding that. What you want to see is the market is moving higher here, but the ADD is cratering. It's negative 600. And you're also seeing negative on the Volt. And you have negative on the Russell and the New York Stock Exchange for the Volt, and slightly green on everything else. The Qs are pretty strong. And when you see the ADD crashing while the market is moving higher, it tends to signal a false breakout. So a good point on that one, Maxine, for noticing the internals. Internals, guys, are the ADD, so that's the advanced decline. We're looking at how many stocks are above yesterday's close or below. If that number is positive, then more stocks are above yesterday's close than below. And if that number is negative, then more stocks are below yesterday's close. So that tells you the breadth is not great today, which tells you that it is ripe for a reversal. If we look at let's look at the charts over here real quick. If we look at oh yeah, the transports are very red. RTY is red. I did not have these charts up. So these are negative signs. The banks are red. These are all negative signs and don't indicate a strong breakout. They in fact do indicate weakness. The Mag 7 is kind of holding the market up. You can see Nvidia is up 2%, basically near or at its all-time highs. Meta, Microsoft, Netflix, Amazon, all strong today. Tesla a little bit weak. Apple's doing well. Google. So the Mag 7 is holding up this market. And to be fair, without the Mag 7's participation, you're not likely to get a big meltdown, but you can get reversals because the rest of the market is weak. Where do you find the ADD? So I have it in Thinkorswim. I believe you can pull it up on here though. If you just type in ADD. Yeah. So you can see it's cratering here. It's down at negative 800 now. So we got a doji candle here, but they are attacking the upper wick. So still bullish as of right now. Again, we will take the first sell we see. But they have made a high above the pre-market high. pulled back, tested VWAP, made another high, also tested VWAP again. So right now the price action is bullish regardless of what the internals say. So we have to respect that and understand those things, but we will take a sell signal should it appear. There it is. We're getting in at 107. So we are 608, 107, and we're going to be at 608.60 for our stop. Now again, we are cautiously optimistic about this sell. We do have a trend day setup. So it's not the best overall setup for a trade. However, as we pointed out, we do have some weak internals. This is the first sell signal of the day, and we do see failed breakouts all the time. So if they do fail the breakout, it's very likely we come down and visit 606.59, which is about, a dollar, $2 lower, $2.50 lower. No, $1.50. I can't do math. $1.50, $1.60 lower. Just in the 21 now. We'd like to see them break through this. If they break through this, then we're back at the opening print and the 607.91 area, and you'd like to see them push through that. So our take will be $1.30, which we just hit, by the way. So that's our first take. So we close half here at $1.30, and then we let the runner run. So that's a winning trade right there. Oh yeah, there we go. Nice selling here. So let me get this. There's a lot moving here. And our stops are going to be $1. We'll see if we can get some momentum to the downside here, some more momentum than we already have. But we already have a winning trade for the day, which is a great day. So the indicator sensed weakness, gave us a sell signal, gave us a winner, and now we're just going to see if we can collect on our runners. Just so you know, the profit take is 20%. So when we hit 20% on our money, we take half of our trade off, and we put our stops at a place where we never let a winning trade turn into a losing trade. Those little wins, those 10 percenters, those 20 percenters, one, cancel out your little losses when you get stopped, and two, add up. When you have a lot more wins than losses, those little ones add up. You only need to average 16 cents a day, trading 25 contracts, in order to make $100,000 a year. 16 cents a day times 25 contracts is $400 a day, which is $2,000 a week, which is times 52 is $104,000 a year. Now there's holidays in there and stuff, but basically 16 cents a day will get you 100K on 25 contracts, which is what I trade. So you don't need to make a ton of money on each trade. You just need to make money. We're actually going to move our stops to $1.07. That's our entry price. So we had them at $1. I'm moving them up 7 cents here, and that's to basically make a 10% winner out of the trade should they fail here to break down. Now, if I'm looking at this, they came down into this area right here. So this was the last, all they did was back test. So you had a breakout, pull back, and then they broke out above this area, right? So they broke out above, and now they come back and back test this breakout. If it holds, that's very bullish, and we'd look for higher. If it fails, then we'd look for them to come all the way down to 606.59. Look for so far, it looks like it is holding, which is why I moved my stop a little bit here. We don't want to give up too much, the gain. Good volume on this though. It's more than the opening bar, but it's also getting bought. So this is buying volume. If they push it down and turn it into selling, then that's an interesting bar because you do have, a lot of volume coming in here. This is 5 minutes, so there's still one more bar before 7. Does anybody know, is there any economic news at 7? Well, 10 a.m. Eastern time. I'll look here real quick. Today is Wednesday. Yeah, new home sales. So there's at least a catalyst. I don't know how big it'll be, but there's at least a catalyst coming in. But this is high volume right here. On this bar, you still have 20 seconds left, and it's the biggest bar of the day. And they are holding, trying to push down. So hopefully we can see some follow through to the downside here and let our runner do well. Right now it's kind of a reversal hammer candle off of that level we just looked at. So they back tested that overnight level they broke out from. Now we'll see if they can push down and break through, or if they're going to continue and trend. Your stop is at 50 cents on ES. Yeah, so if we get in, say, at 608 even, let's say we got in at exactly 608, we would have our stop at 608.50. Speaking of stops, we just got stopped at 107 there. Hold on, I'll get to your guys' questions in just a second. So, stopped for 107. That's a 119 average exit. You can see the sell stop comes up, so we may get another opportunity to short here. However, if they take out this high, that's not a great sign for the bears. As I said today, we would expect the market to go higher given the primary path. So seeing getting a sell and making some money there was good, but if they take out this high, I would be cautious on the next group of sells. Why am I working my butt off when I could be doing this? That's a great question, Will. Come join the team. We'd love to have you. Are all the profit signals and stops automated by the system? So no, but there are instructions on how to do all of that. So you take profit at 20%. So if you get in for $1, you're looking, well, you take your first half. So if you got in at $1, you would take half of your trade off at $1.20. And then what I do is look for the next key level. So had they been able to break 607.45 here, we would have looked for them to come down to 606.59, and I would have taken my next profit down there around that. So I'd have taken another half of my remaining off, and then we would have looked for them to continue after that if they didn't bounce and stop us out. So what I do is I trail stops. I take half at 20%, half at the next major key level, whatever that is, whether it's a call zone or a pre-market low, and then I take, and then I trail my stops 50 cents. So if the options price is $2, I have it at $1.50. Stops are automated. You can see the SS is an automated thing that comes up. That's a sell stop. I don't use those personally because I know where my stops are and how to do it. But if you're uncomfortable with how to set your stop, you can use this, the stop indications on the indicator. 6 years to my pension. There you go, Will. You're almost there. Powell speaks. Teaser, Peasel. Powell speaks at 9. So you have Powell and home sales or whatever here. We have a stop, so we may get another sell signal. We'll see. Got 7 points on the short. Good job, Fitness All Day. Winning day, winning trade. Not a big winner, but little winners add up. Mark McGwire and Babe Ruth didn't hit home runs every single time they walked up to the plate. Those little base hits matter. They still help the team. They still drive in runs, and making money is making money, and that's what matters. I would love them all to be home runs, but that's just not how life works. All right, it is catalyst time, so we'll see if that's enough to give us another sell here and give another shot, or if they're going to break out to the upside. How do you determine your stop? So you have a video on that, and I just went over it, but it's 50 cents from the price I get in at. So if I got in at 608.21, it would be 608.71 for a short. Speaking of which, we may get one here, so run it back on the 608. We haven't gotten one yet, but we might. The NASDAQ does look weaker overall, so we could definitely see some selling here. The NASDAQ actually never issued its own sell stop, so we may not get a new sell signal, unfortunately. Yeah, we're not going to get a new sell signal on this particular trade because the NASDAQ never stopped itself out. So ES and SPY stopped, whereas NASDAQ did not. And so even if they do sell down here, we're not going to have a sell signal for it, unfortunately. FYI, you guys can't see that. I see that because I can see the back end of the indicator. I see all of the data. So that's not something you guys can do anything about. Or, I guess, do anything to see. So your stop is mental and based on the SPY level, not the cost of the option. Yeah, just for the first part. So we set our stop at, so for instance, if we got in at 608, our stop was 608.50, that would be the stop until we got profit. So once we hit, let's say it's $1.20, then we would set our stop to $1 on the option price, and then it stays on the option price after that. So I'll give you guys a quick example here. So this is what is in my room when we're using the indicator. So you can see we got in 598 strike. Our stop was 597.50. Then we hit profit, so we closed half at 241, which is a 20% win on $2. Then we moved our stops to $2, and then we just trail our stops. I closed another half for 285 here, moved our stops to $3, and so on. So the stops change to the options price after the initial stop is set, and we hit profit. Once we hit profit, our stops change to options price. So it's the same trades for NQ and SPY. Not necessarily, but this NQ and SPY need to be doing the same thing. So remember, if you saw the first part of the video, we talked about the setup. ES and NQ are being monitored as well, and when they're not doing the same things, you don't get new signals. And you can see that, you got the sell stop here, and so far you haven't gotten a new sell signal, and you won't until NQ gets reset. But it's a bit choppy because the NQ and the ES are in different. They're divergent a little bit, where NQ is weaker than the ES, so it's having trouble breaking out. It's also having trouble breaking down because the ES is a little stronger than the NQ, so it's trying to push. The NQ is a little weaker, it's trying to pull, so they're working against each other. So the indicator doesn't want to give you a signal because it says, hey, we have different opinions on these two markets, which will likely lead to some chop for at least a little bit. Since NQ is in a sell cycle while SPY is in a buy, what do we expect? Why would it get back in sync? Because they tend to trade basically the same. What will happen is so all that's happened right now is on the back end, SPY has moved back into a sell. But since NQ never came out of a sell, we don't get a new sell signal. So they'll sync up easy enough that they always do. They're only out of sync ever for maybe a day at the most. Very rare you see ES and NQ doing different things. Now, you could see the NQ up 3% and the ES up 2%. That happens a lot. But they're both moving in the same direction. They're both being bought. So in typical out of sync fashion, you're getting a couple bars of chop here. And it's only on the 5 minute that they're out of sync. Remember, in the bigger picture, they're both green today. They'll sync back up pretty quickly, but you get a little bit of chop, and then they'll find their whichever way they were planning on going anyway. Again, I do think the market makers will want to close below 607. Whether they can do that or not, to be determined. So down would not be shocking. But they do have the path of least resistance to the upside. ES is building a squeeze here on the 5 minute, so a interesting development there. NASDAQ has now started to build a squeeze on the 5 minute. ES has been building for a while. NASDAQ is just now starting to build one. We don't know in which direction. That is something that we are working on the indicator. It actually has a tool for that, but it's not accurate yet. We're trying to find some more accurate ways to discern whether the squeeze is up or down. In this case, it may be down. They're coming back and pressuring that breakout area again. So they held it the first time, spiked it, came almost back to new highs, but now what you have is the potential, they haven't gotten there yet, the potential for a high, a low, a lower high, and then a lower low, which would be a very short-term 5-minute trend change, but certainly got to start somewhere on a trend change. Have you seen this type of sideways market? Oh my God, yes. We were in a range for a month. We've been in range for several months. This is very common. This is just um, sideways chop. I mean, very, very common stuff. NQ could try to close the overnight gap. Oh yeah, yeah, 70 points is nothing. They can do that easy. Just a question on the indicator. I have your indicator on 5-minute and 15-minute. When both of them trigger sell, it turns and becomes real moneymaker. Well, that's not a question. I don't know what the question is. It sounds like you're saying, though, that if you have 15 and 5 on confluence, uh, you're doing well. You have a statement. Ah, got it. I like your indicator. Thanks, Sean. It likes you too. I appreciate it. Okay, there's the break of the previous low. So now you do have a lower low. So now we would look for them to come down into the 606.76, 606.59 area. Actually, 607 is the call wall. So that would, and you can see there's a bunch of support here as well. So if you move over, come on, move over. Well, they have it stretched way out. There's our call wall at 607. So 607's got a whole bunch of support, but the low spiked down here at 606.59. So coming down to test those would not be surprising at all. Oh, goodness. 5 a.m. comes early. Yeah, probably the same time every day, but it seems early. So we would be looking for a buy now. We are in a, I believe, let me double check. Yeah, we're in a sell on both charts. So we would be looking for a call. Which should be something known since we already have a sell on the screen. You should always be looking for the opposite thing. I would really like them to come down to 607 before we get the call, or at least 607, if not, you got the close or the low. That would be ideal to get that key level before we get a buy signal. But of course, it doesn't have to happen. There's a ledge of support that they're sitting on right now, sitting actually just above. One thing you can always do when you're trading is understand the opening print of the day. Becomes very strong support and resistance. You can see when they got above it, they came back down, spiked through it, got back above it, tried to hold it 2 more times. Then they just came back in from below and rejected again that area. The opening print is where screens start. So below that, they can turn red, above that green, and you can get a lot of momentum, and you can get a lot of support and resistance at that zone. So just something to keep in mind when you're trading. Those are kind of key areas to watch. The 21 VWAP, the opening print, all going to be support / resistance depending on which way you're coming into them from. Trend day is off the table. Not necessarily, no. Anytime you break the pre-market high and you pull back for any amount, typically they're going to hold the VWAP 21 area. But if they come back and take out this high, I would expect that to lead to bullishness up to that 610 level. So I would definitely not say it's off the table. It's less likely to occur. But if it breaks that high, I would say that you're still in a trend to the upside. If they come down and break the low now, that should lead to further selling in the sense that you had a rejection candle down doji. You had another push here that is sort of getting rejected. We'll see if it holds. They're pushing back now. But had they rejected this and pushed down and broken these lows, you would have seen a pretty heavy follow through at that point, at least down to this 607 to 606.50 area, if not more. Uh, Cyber, I answered that before. You said it's the same trades for the NQ and the SPY, and I said yes, basically, because you want them to be trading in the same direction. Otherwise, you get chop like you're getting now that isn't as consistent in movement. So if the ES is moving up and the NQ is moving up, you're likely to get buy. Well, you have to get a buy signal on both for it to fire, or a sell signal on both. Well, all three, because you need the SPY as well. SPY, ES, and NQ. All three have to fire a buy or a sell in order for it to print on the SPY chart. That's one of the reasons the indicator is so powerful is it's not just looking for one chart to tell it what's going on. It's looking at several charts. You know, part of it's what it's looking at is overall trend, as well as the SPY and the NQ and the ES all being in confluence. So it's not just taking one chart and saying, oh, well, this one chart is moving up. It's saying all of the charts are moving up. They've all met the conditions for there to be a buy signal or a sell signal. So we're going to issue a buy or sell, and that gives it a much higher win rate because you have confluence. It's an indication of broader buying and broader selling, even in the short term. So on the 5-minute chart, it's only looking for 7 to 10 points on the ES with potential. In other words, it's looking for key areas for it to reverse, and you should hit a 7 to 10 point bounce, which would get you your 20% payment for your first take. And then, so they're trying to break down, and if they do, like I said, it should follow through pretty strongly, but they got to break the low first. So it's looking for 7 to 10 points on the ES. In other words, it's trying to calculate, okay, if I in fact hit this level and bounce, do I have room for a 10-point move up with potential? Meaning 10 points is the minimum we would expect, and we're looking for a potential of 20, 30, 40, 70. We've got 50, 60 point moves before. So, yeah, it's triple bottom here now. It's trying to we tried to make it more expansive on how it dictates and calculates what a winning trade would be. Triple rejection here, and now a new high on this bar. This could turn bullish here. We do have squeezes building. Bullish would be the primary path, so not shocking if it does turn bullish. Looking for a call signal, we would be at 608 currently for our call. So again, that opening print rejected off of that and VWAP as well. Is the US stock market's bundle from TradingView enough for the indicator to work properly? I'm not sure what that is, but the one you need, so all of the instructions are once you sign up, you get all of the instructions. And right here it tells you you will need the CME, CBOT, COMEX, New York MEX, E-mini included add-on for real-time data. It's about $7. That's the one you need. So I don't know which one you're talking about, but this is the one you need. '21 EMA with the stiff arm. Oh, yes, it did. VWAP was actually the full rejection, but yeah, they've that's why I have these two lines on the screen and nothing else. The 21 and VWAP are very, very strong support and resistance. Uh, they battled the 21 here a couple times before they finally got through it, and now they've hit it. Basically, came back to it here, not quite hit it here and rejected, and are trying to get through. We do have a gap here that they're going to want to fill, so that's always something to keep an eye on. Rejection off VWAP again, come down, I'm guessing, to fill the gap. There's the gap fill. Little gaps on the 5-minute chart like that almost always get filled same bar or next bar. So it's just something to keep in mind when you're watching these trades. Internals continue to be weak. So even though you're saying relentless buying, I think that the sellers are doing a good job of pinning that buying, but for now. But you're right, if they break through with this kind of strong buying attack, they will likely take this to new highs. But if the sellers are able to win, you're going to see a quick waterfall here. So whoever wins this battle between basically 607.90 and 607.30, whoever wins this battle will likely stretch out pretty quick. In other words, the other half is going to get squeezed. ES still building a squeeze. Do we have a histogram indicator that shows the difference between the 5-minute EMA 21 and the 5-minute price? I'm not sure what you mean by that. Can you clarify? never take a trade on the 5-minute gap. It always reverses and fills. Yeah, it's very common. Very common. Are we still waiting on a sell signal? Or are we done with that cycle and looking for a buy? So what I would, we are looking for a buy. We are looking for a buy. This is a rare instance where, so you have the sell on here, so you'd be looking for a buy. However, when you get a sell stop, typically you're going to look for a sell signal, right? But because NQ never fixed itself, it was unable to issue a new sell signal, and they just sold down. So they finished the sell cycle, or are in the sell cycle. I shouldn't say they finished, because we are still in it, but they're in the sell cycle now, and we are looking for a buy signal. A histogram that would show how far current price is from the 21 EMA. I see what you're saying. No, I don't have that, but generally about 20%. So in other words, no, that's not even accurate either. Because that's on the daily chart, so that would not work on the 5-minute chart. Typically on the daily, it's about, when it's about 20% away, that's considered pretty stretched. On the 5-minute, you know, there's our buy signal. Sorry guys, we gotta take this. We got a 608 at 90 cents. And our stop is gonna be 607.30. We're really just looking for them to break above this opening print. If they can break above the opening print, they should be able to squeeze out of here. They reject, so this is a big breakdown candle, very hard selling off of it. And it's rejected 3 times here, and they rejected 3 times down here. So again, the winner of this range is going to be, should be squeezing the other side. So if the bulls win here, they should be squeezing back toward the highs. If the bears win, they should be squeezing down toward the pre-market low. So this is a key area to watch. Day trade alerts. Let me go back one quick second. Might adjust my stop here. No, 607.30 is fine. If they come back down to this level, they're likely to break it. Okay. This is their now almost, I mean, same bar, third into fourth attempt at breaking through the opening print and VWAP. So far, they've been unable to do so. We'll see if the bulls can find a rally here, or if they're about to get rejected. The ADD still collapsing. It's down near 1,000 now. Seeing, you know, the RTY is down 1%. This is not what you would call a typical bull day. So a total breakout doesn't seem likely to me. Can they push above this high? Absolutely. Can they break out? Absolutely. It doesn't seem very likely to me. But if they do, we'll be happy since we have a long here. Typically when the Mag 7 and the rest of the market are not in a confluence, in other words, the Mag 7 is fairly bullish today, whereas the rest of the market isn't, typically you're not going to see the market break out or break down. You're going to see a range day. But if you do see a breakout or breakdown, it's much more likely to be in the direction of the Mag 7. So if the Mag 7 is green like it is today, the likely direction would be green. If it's red, then down would be the likely direction of a breakout breakdown. But they're rare. Usually when the market is not in sync like that and only a few stocks are carrying the market, you don't get big moves overall. So now you have a triple rejection at the top, a triple rejection at the bottom. The bulls are defending hard, though. They are not letting this sink. Certainly not what you would call an impulsive or ideal move up for a breakout. But we don't have to break out to new highs. We only got to get to about 608.23 or so. That should get us pretty close to a winning trade. And then we'll see what happens from there. Trump talking, lots of noise, chop coming. Yeah. There definitely can be some of that when he's talking. Is Powell done talking, I assume? Really not a whole lot of movement in general. So now we're back at the midway point, triple rejection top, triple rejection bottom. Like I said, whoever wins this battle is likely to squeeze the other side pretty good. The indicator seems to think the bulls will win the battle. Your opinion, using advanced decline line, do you think it's most accurate on short time frame or overall daily move? I think I think both, in the sense that um, when you start to see the market uh, move up or down, and the advanced decline line is telling a different story, it's more of a, you know, red flag. It's not that the trade is definitely going to fail or that the market is definitely going to reverse, but it's certainly a red flag that um, internals are not backing up a move that is being shown on the charts. So when you see it start to crater very quickly like it did today, that's a red flag for this breakout over the pre-market high that this is going to fail. And it did. You know, it hasn't failed for the day, but it failed this move. It has continued to move down. It's almost negative 1,000 now, and it was negative 1,000. It has continued to move down, but the Mag 7 is strong enough to bench press this market by itself. Now, for a runaway train move, no, probably not. But to come back and take out this high and get up to 609 or 610, yeah, I mean that's, you know, another 20 points or so higher. And I don't think that it would be out of the question for him to even go up, hit that number, and do this. So for me, it's more of an indication of the start of a switch. So uh, it started at about 0 today and was negative 600 in the first 15 minutes. And the 15-minute bar was where, or the 15-minute mark is where the market topped. So it's just kind of a red flag because you got to start a reversal from somewhere or something, and that's what I kind of use it for. So you want to see it, if you're looking for a trend day up, you want to see it up around 1500 most of the day. And if you're looking for a trend day down, you want to see it negative 1500 most of the day. If you start to see it moving back towards zero, that is a sign of a weakening trend that will get reversed. Bulls poked above have not been able to fully break through VWAP and the opening print. That level is going to be very important for the day. Getting back above that again will cause a squeeze. Failing that and breaking down below 607.30 will cause a squeeze. The lines have been drawn, and this is short-term squeeze stuff. We're not talking about like 2 days of squeezing. We're talking about on the 5-minute chart, you can see 4 or 5 green bars in a row that push pretty quick. So for reference, we got in at 90 cents. Our first take will be $1.08. That is 20%. There's our $1.08. So we can go ahead and close out the first part of our trade. Misclick on that, $1.08. We'll set our stops to 90 cents. So 2 for 2 today. Got the buy signal here, which was really nice. The sell signal. And this buy signal is squeezing. So I told you if they broke this opening print, you would see a squeeze. And that's what we are, in fact, seeing. Again, do I think they can run this out forever? No, I don't think it's that kind of day. But again, 602, there's not a lot above them until you get to 610 for the call wall. Other than there is, if you come over to chart resistance, there is chart resistance over here. We got to go back a ways. I'm gonna have to go to a bigger time frame. But at any rate, we're up near the all-time highs, which is resistance, and will cause some chop here and or rejection. So on a chart that looks like this, to have 2 winning trades is a good day. I mean, there's not a whole lot of movement. It's very choppy, but the 2 basically straight line moves, this one down and this one up, did miss this sell only because the NASDAQ was not back in sync. But the 2 straight line moves were captured, and they're the biggest moves of the day so far. So that's what the indicator is about, guys. It's even on shitty days where the market's fully chopping like this, it finds some winning trades for you. Again, with the ADD where it's at, I don't think a huge breakout here is very likely, but certainly still possible. If anything, if the Mag 7 flips, then I would say a breakdown is possible, but breakout just doesn't seem fully likely today. Back test of the 21, so far they held. So kind of a slow moving day, but a day where we made money, and that's what matters. Is my account more green than it was yesterday? The answer is yes. Guys, if you haven't taken advantage of the indicator, you can get 30% off of your first month. That code is only good during this live stream. So after the live stream is over, you will no longer have access to it. So make sure you take advantage of that if you want this indicator on your chart so that you can catch moves like this and make it super simple to day trade. Okay, we are stopped out there at 90. Average exit of 99. So that's another small winner, but that's 21 cents on the day. And what did I say earlier? 16 cents a day at 25 contracts will give you 100K for the year. So small winner. Unfortunately, they were unable to give us a direct breakout. That happens. But a winner nonetheless. And I think this is a misconception that most people have, is that every trade needs to be a whopper and some giant winner. And that's just not the case. You just need to be consistent. Take the small wins when you get them and let the big wins come as they come, and take advantage of them with runners so that you always catch the big wins, but you capitalize on all the small wins to keep you afloat until the big wins come. There we go. So let me put this in the other room. If you're bored and you think small wins are boring, welcome to professional trading. That's what it is. It's a whole lot of boredom. And then I always like a trading comparison to poker. Doyle once described, I think it was Doyle, Texas Hold'em as hours and hours of boredom with 2 to 3 minutes of incredible adrenaline rushes. And that's kind of how trading is. It's just hours of watching the chart go up and down with small wins here and there, and then it's more than 2 to 3 minutes because you're watching those kind of bars. But uh, those awesome adrenaline rushes when it does break down or break out in your direction, and you get to catch that full runner. That's professional trading. It's not trading because you think. It's not trading because you have a feeling. It's not trading because you're bored. It's not trading because you're fearful of missing out or losing money. It is simply applying an edge relentlessly and collecting at the end of the day or end of the month or end of the time period. Nobody's portfolio goes like this. Nobody's. You're going to go good day, bad day, good day, bad day, good day, bad day, and so on. But the good outweighs the bad, and if you stay the course, you'll be up here. What are we preparing for today? Or are we waiting for the market to tell us long or short? I'm not sure what you mean. We're just waiting for the next trade from the indicator. So we got our sell, we made money, we got our buy, we made money. Now you have a long stop, so we'd look for another buy, assuming this long stop holds. But I think I've been pretty clear that with the Mag 7 very green and the RTY, Dow, and Dow Transports and Banks red, you're likely to see a range day. If they do break out, I think it would be very contained to break out. I don't think it's like a runaway train. I think it's much more likely they break it down if the Mag 7 starts to turn red, given the internals and how ugly they are. They're very negative on the Volt and the ADD. Was there a new all-time high for NQ? I don't think on NQ there was. I think on the Qs there was, right? So I think this is your all-time high right here. 543.31, yeah, 543.31. So they made a new all-time high and rejected on the Qs. On NQ, I don't think they made a new all-time high. We may get another buy here. In fact, I think we just did. Yeah, right there. Okay, so 608 at 87 cents is going to be our entry. And our stop is going to be 607.30 again. I'll fix the screen in just a second, guys. So we're going to run the play it again Sam trade, where you get a small winner, they pull back to support, and you enter again and see if that'll run it. So in our risk reward model that we use, these trades are not money makers, right? So they were winning trades. They made money in that sense, but they're not the money making trades. So what you have is you have your baseline here. This is your trade entry area. You have your stop area below that. And you have your 20% winner here. And what happens is these 20% winners, these little ding, you know, they turn into like 10% winners after the stop. But anyway, these little winners right here cancel out all of your stops when you get bad trades. And what happens is all of your runners become profit. So this is your profit up here. So what I mean by these aren't money-making trades. Most of your money making is going to be the runners on the big trades. Most of the small wins are going to cancel out your small losses. So the risk reward model is very, very defined in the fact that it's a pretty low risk model overall. Because you get a number of these base hits or small wins, those cancel out the strikeouts, and then your home runs score money. So your risk is really small, as long as you are using good structure, good sizing, good trade management. That's what's really important when you do this. Our first take will be $1.04 on this one. We're not there yet, but that is what we'd be looking for. So sometimes it's important to use common sense. Um, for instance, I didn't, I waited, but probably should have in general. It worked out. I almost took $1.06 right here instead of $1.08 because we came right into this rejection area. And I knew that it was a very high probability of rejection there. But we were 2 cents away, so I gambled and let it ride, and we got the 2 cents and closed out. So sometimes you got to use common sense and say, yes, I want 20%, but I have 19% right now, and we are at a major resistance zone. So maybe I should take profit here and not step over dollars to pick up pennies. I do think the much more likely path for today, honestly, is failed breakout. So they tried to break out and failed, came back up, failed. And if they break this low, they'll definitely be coming down to 606.59. I think that's the most likely path. But again, with the Mag 7 being strong green, it could be a challenge to get that to play out unless they start to fade a little bit. Yeah, the NQ itself did not make a new all-time high. The all-time high is up over here somewhere. It's well, it's 22.5, 48.25. That's not correct. It's 22.8. Does not factor in contract roll. So 22.860 or so. So the buy signal appeared and then obviously disappeared. It doesn't mean we didn't take the buy. We did. We still have the buy. We haven't stopped out yet. So that's just how you have to do it. When you see the buy signal, you take it, because very often you get bars like this where the buy signal came in somewhere around here and it took it up and you get a 1 bar winner, and then they reverse it. So if you would have waited till this bar closed to take the buy signal, you would have been in a horrible entry and not done well. Like I just said, I do think the path is likely down, but the indicator is smarter than me, so we always trust the indicator. But this is not an encouraging sign for our trade. I was a little skeptical of this buy. But again, I'm not looking at 175 things. I'm just looking at price action. And there could be other things that I'm not factoring in. ADD pretty negative today, this close to an all-time high. Yeah, I mean it's down 965 right now, and like I said, the Mag 7 is the only thing holding this market up. If it starts to fade, which see if it is, SMH, yeah, it was up almost 2% earlier. Now it's not 2%, over 1% though. It's fading a little here.
Good morning, Dad.
Good morning, buddy.
Dad.
Yeah, good morning.
Good morning.
Yeah. Hi. Yeah, good morning. Hi. Taking a fiver?
Alright. Good job, Mr. Menzel.
Oh, there we go. We stopped out there. Looks like we're gonna get 64 cents on it.
Good morning, Dad.
So come down, broke this low. We should see them accelerate into the pre-market low here. 606.59 would be the target. If they fail, that would be ugly for the bears. If they come all the way up here, reject it, all the way down, break and fail would be very indicative of kind of an ABC squeeze. We've got a gap here they need to fill. I hear a young trader. Yeah, he had to come in and say good morning. He was happy to see me. So always nice when that happens. There's the gap fill. There's the acceleration. If they can break this low, continue here, you should start to see a little bit of follow through. Mm. 607 is our next major level, very likely, and you're seeing a little bit of rejection right above it. 607 is a call wall. If you zoom out, I did say earlier today I would not be shocked if they tried to close below this call wall because the market makers do not want to pay this. The advanced decline line is signifying that as well. The Vold is signifying that. So it'll be interesting to see if the bears are able to pin this down here around the pre-market low at all. Remember, our key level on the ES is 60.65. If they break below that, doesn't mean that they can't go to all-time highs. It does mean it will likely be a diagonal if they do. So very choppy move up if that's the case. But as long as they're above 60.65, everything is fine for the bulls. Good to hear loud Link. He is loud. That boy loves to scream. IWM really wants to go lower. Probably. IWM has been getting beat up today. It's down almost 1%. And you're seeing ES come down to close the gap. NQ is only 40 points away, so they can easily close the gap as well. So this, these are the benefits of being in my room. Yes, you get the indicator stuff, but you also get, I feel like I've told you what was going to happen today with levels pretty well. Based on the ADD, the volt, and everything, they failed to break out, which I said I think would likely be the case. If they fail to break out, they're likely to come back down here. So these are all things you get in my room if you're trading a different way, or you're not using the indicator, you just want levels or want to understand. These are all things that we go over. Thank you, Maxime. Have a wonderful day. I think we'll probably call it here. I'm going to see if they give us a buy signal off of 607 or even yesterday's close or pre-market low. It should be pretty good support down here. We'll see if we get a buy signal. We may take that. Otherwise, we'll probably call it for the day on the live stream. But for now, we'll stay tuned and see what we get. They've hit the 607 level. Trying to break through. 606.59, this is a failed breakout. That's almost always going to go back and tag the pre-market low at a minimum. At a maximum, it can break down even further. But 606.59, I think, is very likely to get hit. Whether they bounce first and do it later in the day or they do it directly now, either way, it's very likely for them to come down and tag this level, if not break through it. Keep in mind, if they do break through the pre-market low, you would not have a whole lot of help until 605. So you get another $1.50 of drop down here to this next support level. The options pricing, so you got about $1 or so at the money, does not indicate a huge meltdown today. So I do think a range day is most likely. I do think they will likely hold the pre-market low. Obviously, they're allowed to do whatever they want. Things can change. But again, when you get the Mag 7 green and the rest of the market red, that generally leads to a range day because you have two very powerful forces going against each other, the whole rest of the market versus the Mag 7. And if they're going in opposite directions, then it's hard for them to make headway in either direction. Next week is a holiday week. Friday is July 4th. Typically, that week is very bullish. So if you are a bear, you're going to want to see today, tomorrow, and Friday kind of start to push down to, settle low, because typically next week is an up week. And it doesn't have to be like on Monday we start going up. They can go down Monday and Tuesday and then up Wednesday and Thursday. But typically by the end of the week is bullish. All right, give us a little DCB there and then continuation. See if we can come down and tag this low or not. So is it possible that there will be no new all-time highs? Sure, it's possible. Is it probable? No, I think we're likely to hit them. Right now, the current path is more direct, but should they break down below that 60-65 level, then we would start looking at a bigger pullback before they go to all-time highs. But I do think that all-time highs are still very, very, very much in the cards and the most likely path. This is just a small pullback. That's, I mean, until proven otherwise. Right now, it's just a small pullback, though. I mean, they're not even red on the NQ yet. I think they'll probably get there, but we will see. Unfortunately, we will start the tariff nonsense and noise next week. Oh, well, that's interesting. We'll see how that plays out. Does he have deadlines that are due next week? I don't even know what would the tariff talk would be. June 9th, July 9th. Oh, that's after July 4th. Next week is the July 4th week. People put way too much stock into what Trump says. The market does move when he speaks sometimes. It didn't move much today. But what he says is irrelevant. When he says tariffs, that doesn't necessarily mean the market is going down. Did it a few times? Yeah, it did. But if you just look at overall news cycles and overall news, you'll see that none of that stuff matters. So far, they're still holding 607 here. They have drifted a little bit far from the 21 and VWAP, so a race back up to tag that would not be uncommon here. Yeah, SMH has weakened quite a bit today. Well, up by half. Yeah, they were up at 274. They're now down at 270, 290. So they've dropped off here, coming down to test their low of the day area. So we are seeing a little bit of fading in the Mag 7 space. Semiconductors kind of being the leader in NVIDIA. You know, NVIDIA is pressing on its all-time highs, so I would look for Nvidia to make a new all-time high here shortly if they didn't already today. They were within 13 cents of it, it looks like. So they rejected just below their all-time highs. I think it's pretty likely they'll come back and tag that. Oh man. Well, let's do something here, market. So this was a buy zone in the pre-market that they're in right now. So support is here. They obviously went a little lower to the pre-market low, but this is a zone that they bought. And the pre-market low only takes into account early trading. So actually down here at around 606.20 would be the low. Hopefully you guys are enjoying the stream. I know it's been a slow moving day. We have had some winning trades. If you liked it, what you've heard or the information, hit that thumbs up, share this, comment on it. Any interaction with it helps it spread to more audience so I can help more people effectively. And that would be very helpful if you did that. So thank you in advance. I appreciate it. Make sure you hit at least the thumbs up. It's easy to do. It only takes a second. And if you liked what you saw, it helps me a lot. We're tangled up in the 200. Oh, yeah, is that the moving average we're at? Probably on the 5 minute. Gold and silver flipping green. Also, a little bit of a negative sign for the market. They're not really tied together in that way, but people tend to run to gold and silver as defensive stocks. So seeing those turn green is kind of an indication that people are buying those, which means they're not buying the current market, or that they're at least worried about the current market. So they're running to a more, what's been traditionally considered a safe haven. I don't think it will be soon, but that's a topic for another day. slowly dripping down to the close from yesterday and the pre-market low. A lot of support here. You got the call wall. You've got overnight support in this area as well. You got yesterday's close in this area. You got the pre-market low in this area. So a lot of support in this zone. If they're able to break this zone though, because yesterday was a trend day, it does open the door to come back down here to 604 pretty quickly. So something to keep an eye on there. Now your indicator on the hourly is on sell. Can the sell signal change its mind till the candle is completed? Yeah, so until the candle actually closes, there's no actual print. That doesn't mean we don't have trades like we had a buy right here that we saw the buy signal. Obviously, it didn't hold and we got stopped out. That doesn't mean that doesn't count. That's a losing trade that's on our books. It's in our averages. It's all accounted for. You just don't see it on the chart. And the reason I don't talk about those isn't because I'm like, oh, cool. I'm not going to tell you about the secret loser we had. It's because we have secret winners too. We have bars like this that go up. We get a 1 bar winner. It comes back down. There's no buy signal. There's no reason for anybody to believe we had a winner there. So if I just said, no, this was a winning trade, you just can't see it. Sounds really fishy, right? So if I can't say that, I'm not going to talk about the losers. That you can't see either. I'm just going to show you the numbers and say, here are all of our trades. Is our outcome. It's not anything about me trying to hide that or not talk about it. It's more about, it's really hard to talk about something that isn't there, both winning and losing. Okay, we'll see if we get a buy signal here. If we do, this will be our last trade of the day, at least for the live stream. Options prices are only factoring in about a 20-point move the rest of the day. So, that can be 20 up or 20 down or 5 up, 5 down. It can be, but essentially what it's not factoring in is a huge meltdown or a huge breakout. Market makers have been wrong before, and heavy volume has come in and changed that, where you had a $1.50 option all of a sudden up at $6, $7 because the market moves so fast. But generally, when options prices are around $1 at the money, it's telling you that it's going to be a pretty slow day. $607 or $608, I'm not sure what you mean by that. was the buy. We're going to go 607 at 111. Our stop is going to be 606.75. Give it one more shot today. See if they can get us back up to VWAP or something. I'm not, again, super stoked about this trade, but the market should stay in range. So the pre-market low, is below our stop, but we're in that area of support where they could bounce here. So we'll see how they do. Again, I'm a little skeptical on this long that we're currently in. We are at the call wall support, so that is another key level that we would be trying to trade off of here. That's why the indicators looking at this price action saying, hey, they've been holding this for a few bars and now we're starting to see potential for a breakout. And then it looks at momentum, volume, and other factors. But just to give you an idea of why you would get a signal here, coming off of 607 is a very key level. The move down, the previous bounce failed at pre-market high, so if this bounce limited to EMA 21, we could have a trend day down. No, you still got to get down to the pre-market low and break it. So remember, you got to get past the pre-market low, come back up, and then break again. And that drawing, they can come way down here, then come back up and break down. But at any rate, they got to get past the pre-market low to start the possibility of a trend day. All right, we got stopped out there. That was a solid quick spike down. 77 cents, or 78 cents, sorry, 78 cents. Not an ideal stop out, but that's how it goes sometimes. So they spiked the pre-market low here. We'll see if they hold. Remember, the actual low is over here at right here. We'll put a line in so we just know where it is. I said it was very likely they were going to come down and hit this pre-market low. That's exactly what they did. Once you get a failed breakout, you should expect the pre-market low. Once you get a failed breakdown, you should expect the pre-market high. That's a little trading trick if you didn't know that. If you fail to break out, you're going to very, very likely go back to the bottom of the range. If you fail to break down, you're very, very likely to go back to the top of the range. I see for trend day down, you have to break the pre-market low, and for trend up, we have to hold the pre-market high. No, you have to break the pre-market high. It's both ways. If you're trending up, you break the pre-market high and then hold the 21. If you're trending down, you break the pre-market low and then hold the 21. And then make a new low. So that's the key. It's not just that you hold or break. You got to break the pre-market low, come back up, back test the 21, then break the level you made here. So then they got to come back down. Excuse me. Come back down, break this level, and that would be indicative of how a trend day is identified. We will try one more buy if they give us one off of this area here. As this is the expected move, and you would expect a potential bounce here. If that doesn't work out, then we'll call it for the day and move on. Okay, we're at 86 at 607. Take one more long here and see how it goes. Oh, I'm going to update my stop. 60. Our stop is going to be 60625. Our first take, let's see, 86 is 16, 17 cents, $1.03. First take will be $1.03. Assuming we get there. Should have a little trouble here. You've got this consolidation breakdown zone as well as this breakdown candle right here at 607.18. Getting past that should lead us up into this 607.30 area and then back into the 21 at 607.40. But this area here you got to get through first. Curious with a win and the losses for today, what have you made or lost? 1 second. We are down a little bit. Let me see here. The screen is very slow. Give me 1 second here. We got those spinning wheel of death going on. Currently, we are down $825 for the day. But if you think of things in a day-to-day or trade-to-trade basis, you're going to be you're going to have trouble trading. You have to think of things in the big picture. You're going to have winning days and losing days. You're going to have good days and bad days. Today is obviously not a good one so far, but that's just how it goes. That's trading. We've just had 4 monster days in a row leading into today, so you take the good with the bad, and you get a lot more good than bad. For me, a single trade, a single day, a single week, a single month is absolutely useless to track. Let me rephrase that. Absolutely useless to worry about. You should always track what you're doing. You should always track your trading. But worrying about a day, week, or month, you're going to really put yourself in the hole, because winning streaks are part of it, losing streaks are part of it. There's no magic bullet. There's no super duper 100% trader out there. It just is a grind. The whole thing is just about discipline and applying the edge over and over again. And if you look at the chart, this is a horrible day for anybody to trade. The only real move was this down move, which, just because of how the cycles worked out, we didn't catch that particular down move, which happens. But this is just not a good price action day to trade. We always have to try to trade, but we don't know what price action is going to be until we see it. The two biggest negatives of today, this spike down was a tough stop out. You just couldn't get the price you were supposed to get. So we ended up taking probably 12 extra cents, 10 extra cents on that one alone, which is $250. So when you get really hard breaks where the stop out gets crushed, those are tough trades. I mean, there's just nothing you can do about it. You can't get out fast enough, and you're not going to get the price you want because the bar moved too fast, and that happens. I mean, that's just, you get it in the positive way too. There's been many times where my 20% take has been 6, 7, 8 cents higher because the bar moved so fast that I got whatever price it was. So, um, you know, on top of an overall choppy day, this stop out was kind of a rough one.
He just keeps saying hi.
No. Once I'm going to pull up because it's important to kind of understand these things. Man, my computer is slow when I live stream. I'm trying to pull something up here, guys. So far, not able to. Okay, let's see if I can put this on here. There we go. Okay, so this was last November. It was our worst month ever. And this was a 1 week stretch, basically, the 8th to the 14th, not even a week, where these were all the trades we had, every one of them. Loser, 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 small winner, loser, loser, small, that wasn't okay, winner, but loser, loser, or winner, loser, winner, winner, loser, loser. So you can go on massive losing streaks in trading. It's just part of it. It's the worst month we've ever had. And this was a big part of it, this streak right here. And that's just part of trading. You have to understand, for the year, we made 35% on our money. On a 100K account, we made $35,000. You can't find that kind of, and this crushed it. We were up over 40%, and November was just a jerk month. So you can't look at the short term and try to evaluate trading because it's just, or trading styles, it's just not how it works. You're going to have just funky markets where the market's doing weird things, it's doing unexpected things, it's going against the norm. They're probabilities because most often they play out a certain way, but you can flip a coin and you would expect every other flip to be heads, but if you've ever flipped a coin for any amount of time, you can get 10 heads in a row. That would be, if you're betting on tails, that's 10 losses in a row where you should be winning half of those. So in the short term, things don't matter. That, of course, they matter, but they don't matter. You want to be evaluating your trading and what you're doing and how it's working. But in the short term, trading isn't, win and loss isn't as important as having a good trading plan, understanding your stops, understanding your discipline, and all that kind of stuff. So I wanted to highlight that because people are always concerned about, I tried it for this a day and it didn't work, or I did a trade and it was a loser. There's going to be a lot of those. Losing is not a bad thing. It is a learning opportunity. And if you can just go ahead and accept that you're going to have losses, you'll have a much better mindset. I say it, I think, every live stream. Tony Robbins stole it from, I believe, Dale Carnegie, but the quote remains the same. And that is, understand what the worst possible outcome can be. And if you're okay with that, you have nothing to fear. There's no reason to be afraid. If the worst possible outcome is I'm going to lose my trade, and I'm okay with that because I understand that there's going to be winning trades coming, and that's just how it works, then I don't have any fear. I just have to understand that I got to size my trades appropriately. You know, never more than 5% of your overall capital. And 5% is like when you're really going for it. You think we're in a 3 of 3 breakout or something, that's a full size trade. So that you can survive the losing streaks. The whole point is be ready to trade, be able to trade again tomorrow. And you do that by protecting your capital and by having stop losses and by understanding that losing trades are part of it, winning trades are part of it. Never get too high, never get too low. Just apply the edge relentlessly. People think that professional traders never lose, or that these tools that people make, like my indicator, are going to be foolproof, and that's just not the case. You have to understand that a 60 to 65% edge in trading is enormous, and that means you're still going to lose 35% of the time to 40% of the time. The key is to keep your losses small and let your winners run. And that's why we are successful. We're trying to push up off of this low here. I'd like to see a little acceleration, but I won't complain if we get to our target. I traded with a breakout trader before I found this, and April, May, June were terrible months and we got crushed. I almost gave up trading, but still feel my mindset is affected. Any suggestions? Yeah, the first thing is I would start trading very small to get your confidence back. And so maybe trade just, I don't know what you were trading before, but like trade 2 to 3 contracts if you're going to trade options. um, so that you can, start to see your strategy play out at a small level, so you're not getting totally crushed on money, as well as being able to fine tune your trading. And the other thing I would do is paper trade maybe for a little bit. You can do that and not be trading real money, so you can have a little less stress while you're trading. And then understand that trading is a longer game. Now, 3 months of losing, you shouldn't have that. I've never had 3 months in a row of losing. I had two, November and December, and December was a small month. It wasn't a big deal. November was a bad month, but prior to that, we had like 9 straight winning months. So those are the two things I would do, is make the trading less stressful for you. And if you can't do smaller, like maybe you were already only trading 2 or 3 contracts, paper trade for a little bit, get your confidence back, understand how to enter the trades and exit the trades, get a full understanding of what's happening. I tell people all the time when they say, why should I get your indicator? And I say, well, it has a 30-day money back guarantee. Put it on your chart, paper trade it. You don't ever have to spend any of your own money, just the $59, or if you take the 30% off coupon today and get it, and paper trade it. After the month, if you don't like it, you get your $59 back and you didn't lose any money, right? So those are some things I would do to just kind of get my mind right. And then I would suggest watching the first 2 episodes of my trading podcast, Subconscious Trader. It's all about psychology and mindset, and why you feel the way you do when you trade, and why you fail when you trade. Those things should help you out. Was trading 40, now it's 6 to 10. Yeah, I mean, that's a good idea. Sizing down is definitely a good idea, until you get comfortable that you're in a program that works. And I would always do that with any program. Like when I first started trading my indicator, I was only trading a few contracts because I wanted to kind of test it and make sure that I wasn't wrong, or that the indicator, that it was a winning strategy. And once I did that for several months and proved it to be consistent, I moved up to what I trade now, which is 25 contracts. I could trade more. My account could easily allow me to trade more. I've always traded 25, and I'm comfortable doing it, so I just do that. But that's what I would do there. Are all of these buy and sell orders 0 DTEs? Yeah, I do it that way. You can do whatever you want, but they are today's expiration, so 0 DTEs, yes. Slow moving here. Bears took it right down to the pre-market low, and so far have failed to break through. Bulls are consolidating above that. If the Bears can't break down soon, I would look for the Bulls to push up out of here, at least to the 21. Right now, they're letting the 21 come down to price, and then we'll just see what they decide. By they, I mean the market makers. So instead of coming back up to the 21, they went sideways and let the 21 come down to them. Now, once the 21 gets down here, the question is, are they going to reject it or push through it and come up to VWAP? Given overall price action and the fact that I don't think we're going to fully break down, I would guess they're going to grind through it slowly. I don't think we're going to get a massive squeeze here, but certainly possible, I guess. I would be open to it since I have a long. They need to break above 607.12 here to kind of get going, really above this breakdown bar, 607.16. So if they can get above that, they're going to contend with the 21, and then they can try to push up out of here. this price action is choppy. So I would expect a low at some point, whether that's today or not to be determined, but I would expect them to kind of do something like that if they're going to continue. Starting to see the ADD come back up a little bit, starting to see some buying coming in on the gold, so we may see a little bit of a bounce here. Remember, we would not expect, given options pricing, overall price action, and the day, we would not expect a breakdown. Almost there. Come on, guys. Push up to the 21. That should get us there. I bought short on the top. Good job. I'm always skeptical once the market has moved down when people tell me what they did in the past. I'm not saying you didn't buy short at the top. I'm saying that most people like to say what they did afterwards and don't mention in there that they missed 5 other trades. I'm not saying you did any of those things, but good job if you did that. I'm going to move my stop up to 606.65. Tell you why in just a second. So the base of these two candles is basically 606.66. They should not be coming back below these, or they're gonna break down. So we don't want to eat that full stop all the way down to 606.25 now that we've pushed up into this area. If they're going to continue, they really need to hold that area. So we don't want to have to let them come all the way down here for the stop and eat all that extra loss. We're also we were pretty close to our take here. We got within about 5 cents, and if they come back up, into that area and we're close, we may take some profit there as well. Even if it's a little less, kind of like I talked about up here, where we did get the full $1.08 or whatever it was. We could have taken $1.06, but I let it go and we got the $1.08. We don't want to step over dollars to pick up pennies. So if it's just a couple cents short, you can take that profit if it gets back up here, because this is not indicative of a big breakout, and so we want to just protect against that a little bit. Um, okay, I'll be done as soon as I can. That clock ticking would drive me. Oh, that's the fan. The fan is the ceiling fan has a tick on it. I don't even hear it anymore, honestly. I can't believe you guys can hear it. This microphone usually shields that kind of stuff out of here. Really, really, really slow moving here, guys. Have a good one, Sam Sam. Thank you, Jacob. Got to get some work done. Good luck with the trade. Thank you. I think I'm also going to wrap this up. We all know the stop. We know the price target for our first take. After that, I would try to let it run personally into this 607.50 up to VWAP area if they get there, if they happen to break to the upside. Somewhere in there, I would look to take my next amount off and then set my stops, keep those trailing stops. So I do have to use the restroom. So I'm going to go ahead and shut it down here. Remember that coupon does expire about 20 minutes or so after I turn off here. Once I get everybody set up with the indicator who purchased it, that coupon does go away. So take advantage of that. Make sure you hit the like button. If you liked what you had today or what you saw, the information given out, all that kind of stuff, share the video, subscribe, all that kind of stuff. Thank you guys very much. Have a wonderful hump day, and we'll do it again next week.